On. Okay, well, welcome left fielders. So glad that you guys all showed up here. This is our first meeting of the new year, and although it's not the first meeting as left fielders, it's really the first meeting where we have an expanded group, and so we really appreciate all of you spending your part of your Monday evening with us. So welcome to the left field. You know, every meeting, I just kind of want to remind people of our mission, which is basically we're trying to create a community of people that are interested in creating the financial freedom or working towards financial freedom through passively investing in real assets that produce real income. And that's our goal. We are open to anyone who is interested in passive investing. You know, we have some syndicators on here. We have a lot of passive investors, and we have some syndicators who do passive investing. So I just want to make it clear that, you know, we're open to everybody as long as we have like-minded people who are kind of on the same track as us and interested in the passive investing. I will go through our team because we're going to have the whole team here is going to kind of run this meeting, and it's the purpose of this is kind of to give you an overview of where we're going, a little bit about where we've been, but also where we're going. Our team is made up of all investors. It's at least on my screen, they're on the top row, actually, Chad and Sean and Steve and Ryan. And, you know, they've all put in a ton of work. They have regular W-2 jobs, unlike me, but they put a lot of time and effort into this group. And I really appreciate it. Just so we're clear, none of us are meeting planners. We're not professional bloggers. We're not web developers. We're not marketing gurus. We're just guys who are interested in passive investing. And we decided to get together and, you know, out of that, this group was born. It was not our intention. I don't know where this group is going to end up, but I know that we're going to build a community and get there together wherever we do end up going. So today, real briefly, Sean is going to talk about the survey we sent out. There's some survey results. Not all of you were in the survey because some of you have joined since then, but we have some pretty interesting numbers, I think. And then Steve and Ryan are going to talk about some full cycle deals they've had, because let's be honest, most of us are newer passive investors and we don't have a whole lot of exits, right? We don't have a whole lot of full cycle deals. And it takes 3, 4, 5 years before you can test out these sponsors and see if they're who they say they were or doing what they said they would do. And that's just the nature of this. So I think it'll be helpful to hear from a couple of people who have actually gotten their money back and had returns and seen some success. So that we'll do that. And then Chad is going to be showing us the website updates. Now, I know you guys all know how to use the web, so he's not going to go through every single page. You can check out our website on your own time, but we've made a lot of updates and we're getting ready to release what we're calling the infielders site, which is going to be a membership only site. And that's where you can access some of our tools. And we've been working pretty hard on those tools, and Chad is going to take a couple of them for a test drive to show you what they're looking like. And after that, we'll do a quick question answer if people have questions that weren't answered along the way. And then, as always, we're going to do a new member intro, which, you know, I would love to be one of the groups that we can go around the room and everyone, you know, tell us your story and all that. But, you know, Matt's got a bus to catch back to Boston. And, you know, we'd be here all night. So what we're going to do is I'm just going to randomly pick 2 people and ask them to just give a brief, hey, this is kind of my path to passive investing, or this is what I'm doing here. And that way we can all get to know each other a little bit. And then we're going to go into breakout rooms. Now, we did this with great success until it really got messed up by somebody at the end. Last time we did breakout rooms, and it was awesome. Everyone went to a little room. They had a little private networking. And then my room finished up real quick. And so I ended the Zoom call, not realizing that when you end the Zoom call, you end it for everybody. So I did that on purpose just to illustrate to everybody that we are not professionals as far as meeting planning and all the rest go. We are just guys trying to provide a passive investing experience for you. So I appreciate your patience. We're doing the best we can. I love feedback. So, you know, all the people who said I messed up the Zoom, I get it. Keep it coming. If you find other stuff to help me out on, please do. So that's kind of my opening spiel. I want to just briefly, before I pass it over to Sean, who's going to talk about the survey and a little bit of our path, I just want to tell you how we kind of started. And how that was is, we have a group, some of you are members of Coin, which is a local group for buy, hold, flippers, people who are actively owning property. And actually, Nate Roderick, who's on the call, is now managing, running Coin with a team of people. And man, he's doing a great job. It's a fantastic group. But I realized I wasn't doing that anymore. And so I said, well, how about we get some passive investors together, and it'll be a great excuse to go out to dinner and have drinks and kind of meet some people who are doing the same stuff. So I thought, how about, I don't know, March 18th sounds like a great day to start that up. And for those of you in Columbus and most other places, the world shut down on March 16th. So that canceled that meeting, which out of all the things the pandemic has done, the one good thing is it has provided us with this platform. Because if it wasn't for the pandemic, there would be 12 of us still in this group, and we would be meeting, having dinner somewhere, because 12 was the largest private room I could get for free. And so that's why the number was 12. And so the Zoom enabled us to get more people involved. We got some out-of-towners. We started growing our network, but we wanted to keep it small because we liked the idea of kind of a mastermind. So we kept the numbers at 20 for a long time. And then, as we grew, and Sean's going to talk about some of the things we did, but as we grew, we realized that we could have a bigger group and get some people interested and share what we know and share our networking. And then we could do the infielders group, which we're going to talk about a little today. And that could be kind of our mastermind, because there's a little barrier to entry there, right? You're going to have to dig in your wallet and pay some money to get in there. And so that's going to, there's nothing wrong with the people who just want to be educated, because everything you can see on our website now is free and will always remain free. The blogs and some of the other stuff that you'll see. And that's our intention, is to help whoever wants to be helped and educate whoever wants to be educated. But when we get into the infielders group, that's going to be where we're really going to talk deals. We're really going to have some tools that can help you. So that's kind of our vision. As I said, we have no idea where this is going to take us, but we're here for the journey, and we're going to see where we go. And that's where we are right now. So with that, I'm going to toss it to Sean, who is going to, I think, take over the screen. And he did a great job on these graphics. We do not have a professional graphic designer, but we do have our Vice President of Graphic Design, Sean Donnelly. Take it away.
Yes, thank you very much, Jim. I will say, I think I'll speak for most of us on this call. It will say, when I say I'm glad there are more than 12 members, because that gives us that many more voices, so we don't have to hear yours all the time. So that's good. I'm glad we're beyond the 12. Can everybody see my screen?
Yes.
Hopefully. Okay.
Yep.
Everybody can see it well. I tried to blow it up as best I could without
Looks great.
hurting your eyes too bad. So here we go. And I think Jim's going to follow up after this evening with a note that will include this, so that you can look it over a little bit, at your leisure, a little bit longer in detail. I'm just going to pick up where Jim left off with our timeline, and this is strictly 2020 highlights. So there's some updated numbers that I'll go through in a little bit, but keep in mind, this is just 2020. So the first half of this timeline Jim talked about, we were going to have, this group called CPIG, which was the Columbus Passive Investing Group, which is now Left Field Investors. We were going to meet for dinner. And then, as Jim rightfully pointed out, our group was able to expand because we moved to Zoom. And so we had our first Zoom meeting on April 8th. And then May 12th, we had our first syndicator, Travis Watts, join us from Ashcroft Capital. And I'm not going to steal his thunder. Steve's got a presentation coming up in a little bit that is going to go through one of his deals. And that sponsor is actually on this call tonight. And he was our second syndicator to join us just 2 meetings or so after this May 12th. So we're glad to have him back again tonight. And then there was a lot of discussion between May and leading through the summer, where we wanted to go with this, what we wanted to call it, really just a vision and a mission, trying to solidify that a little bit better than where we were, just the kind of loosey-goosey shooting from the hip. And so with that, throughout the summer, we developed some tools that you're going to see this evening. They were the first iteration. Now we're on, I don't know what number version, but we are a long ways from where we first were this summer with these tools. And we're going to go even beyond these tools, these first two tools, the syndicator questionnaire and then the deal screener, and which we'll get into a little bit later this evening. And then October 26th, we officially moved from CPIG to Left Field Investors. And then in November was the creation of the website. So as you can see, there was a lot of big highlights that happened, and there was a lot of work behind the scenes, not only from the five of us who are sort of the founders, but from a bunch of people in the group, writing blogs, authoring blogs, offering insight and direction. So there was a lot that happened from March 9th to today from a lot of people. So all of you that have participated, thank you, because we certainly could not be here without your help. So again, through May 31st, the number of sponsors interviewed was 113. Meetings hosted was 11, and the blogs authored was 9. We're now up to, I think, 13 blogs that have been posted on the website. There's a few more that have been authored that haven't been released, but I think we're up to 13 now on the blogs. Lost track of the number of sponsors interviewed. I know just in our meeting last night, the five of us each have a bunch of interviews coming up in the next couple of weeks. So that number continues to grow. And the meetings held, obviously it's the fourth Monday of every month, so we're beyond 11 too. So we just continue to progress even with COVID looming over us. So if we move into some of the nitty gritty, getting into the weeds, a lot of this is the survey. As Jim said, many of you were members of ours, so you got the survey. Many of you joined after the survey went out, but it was a survey just trying to gather some information, anonymous, of course, and trying to get down to some actual numbers here and see if we could put some value to what we're trying to bring to the table. Again, through December 31st, we had 56 members. We're now at 83 strong. So that's roughly a 50% increase since since the end of the year, and just a few weeks, which is awesome. Syndicator guest speakers, we had 4, and we'll get into the calendar. We've got a pretty good lineup coming in the next few months, so you'll see that number grow even more. Pod guest appearances. Now this is our beloved leader here at 5, and he's been on 2 more since, so that's up to 7 already. With many more to come, which is great. I'm not quite sure why he keeps getting invited back, but it is impressive nonetheless. The average invested, now this is per deal. Average invested per deal is $291,000. And the average deal is just under 7. With obviously multifamily, being number 1. I think everybody would guess that. And then there was self-storage, ATMs, triple net industrial lease, and notes and lending rounding out the list. So by far, most people are in multifamily, and that's to be expected. Average cash flow, $16,000. That's annual per member that's answered the survey, bringing in $16,000 annually. And then just some fun facts, if you will. The number of conversations, we lost track. So this is our best guesstimate at under 800,000 conversations, about 1,200 laughs, and certainly no less than 8 COVID beards were grown in that time frame. So again, this is based on our community who actually received and then answered the survey, and also through 2020. So it does not include anything that we've done since we flipped the calendar, and it has been quite an active year thus far, just 3 or so weeks in. So I don't know if there's any questions there, but like I said, I'm gonna send this to Jim after the meeting. He'll send his follow-up note, and this will be included. And if there aren't any questions on this, I think we're gonna move into Steve and Ryan, with Ryan taking over first to run through some deals. Ryan, if you're ready, I'll stop sharing my screen here.
Yeah.
And give me a second.
Is it possible to ask one quick question?
Sure, please.
If you can scroll down here, I just want to make sure I understand the numbers here. Average cash flow is 16K per 291K invested. Is that correct?
Yes.
Okay,
Correct.
so that's about 5-6% without the capital.
Yeah, and Mike, part of the thing to think
Sorry, my
about.
screen is going crazy here. That's why my pause.
No,
Sorry,
no,
guys.
that's okay. These are crazy times. So understand. So
Yeah, the most of these deals were probably in the first year, or a lot of them were. So the numbers, you can't really look at 16 divided by 291 to find out what the return would be like, because there's so many first year deals where you might not get cash flow at all, or you might get smaller cash flow.
that's all I want to understand. So thank you. Yeah, again,
People
thank
could have invested in one of these deals maybe later in the year, right? Like in October or November,
Correct.
maybe.
Yeah.
I understand.
correct.
I mean, I'm looking at absolute, and I want to make sure I understand it properly. Thank you. Thank you.
Yeah, and we've got you know, there's some people that invested in a few deals, and some people that invested in a lot of deals, people that put up a lot of money, and some people that didn't put up as much money. So obviously these are averages, and we figured that was the best way to show it.
No, and that's a good question, Mike. And you know, as I always say, engineers are people too.
I'm saving them for you, Jim.
I know.
All
A
right.
good question.
Sorry, Ryan, my screen was locked there, so I think you should be good to go
You're
now.
good. You're good. All right, let me give this a shot here. And all right. Okay, are you able to see my screen? It says exited deal summary.
Yep.
Got it. All right. Everybody kind of disappeared, so I saw Jim's thumbs up there. We'll go with that. I'm going to add one more bullet point to Jim's checklist of what we are not, and I am not a professional public speaker, so I hope for a little bit of grace on that too. That is not one of my professional specialties, but as we were building the agenda for this group, I think that one of the things, like Jim mentioned, that's real important is going through the full cycle deals. And Steve and I were putting together our summary of the ones that we had seen go full cycle, and we determined that really ours were exited deals because full cycle is probably 3 to 5 years. And so I have an exited deal, but maybe not full cycle as you'd normally think, 3 to 5 years. So what I had is one of my very first ones from back in 2018. This deal was with Western Wealth Capital. Sorry, Matt. This one was with Western Wealth Capital out in Peoria, Arizona. It is a 220 unit, 55 plus community built in '84. It's a value add deal. And the biggest portions of those value adds were normalizing rents. They figured there was a 30% value add opportunity in normalizing and bringing to market rents. We were going to plan to provide interior upgrades to 145 of those units and install washer dryer in 160 of those units. That was purchased in June of 18. Purchase price was $23,250,000. Equity required $996, and all in was just over $26 million. I won't read every detail on here, but 70% financing on a 3-year interest only, and projected to be held for 5 years with a 65-35 LP-GP split on the limited and general partner there. Projected return over 5 years of 116%. I realized that I have these numbers wrong here in underwriting. We had 3 years where they had intended for rent increases of 4% a year, and then the 4th and 5th year we're planning to go to 5%. Underwriting assumed the occupancy would remain at 95%, with an economic vacancy going from 16 down to 10. This deal sold in December of 19 and was held for just over 19 months or 545 days. Breaking down what the pro forma showed for Sunwood versus what it hit, projected at 23%, actual was 21.3. ROI 31.8, and kind of to the earlier discussion or the earlier question of why the cash flow might appear different in that first year. Obviously, in that first year, we didn't hold it for a full year, but annualized return that first year was 2.4%, and then sold at the end of that second year for 129% for a total of 131.8. So one thing about Sunwood, Western West Capital has kind of refined their processes over the years to really get down to a science of how they go through their deals. And one thing they realized very early on is that value add and rent increases are difficult in a 55 plus community where you're trying to drive income, drive rent increases to a typically fixed income tenant base. So they realized early on that this wasn't their perfect fit within their model, and pivoted and exited the deal for profit for the investors, and also it helped them refine their process going forward. So that gave me comfort, even though it wasn't a full cycle deal. I got near the return I expected, and they knew how to get out of it for the investors and to pivot and change their model going forward. So I really appreciated that, and it helped instill the confidence in me that they're doing what they know and what they know how to do well. Another quick thing too, I thought I'd show here. This is just a quick summary of the portal. And Jim, you want to give me a thumbs up, or am I still sharing the same screen? Okay. We have, this is a portal here, and I won't go through all of it, but this is the investment summary page on the portal. It gives you a quick detail on all the investments that I have with Western Wealth. This one was sold, and it gives a breakdown of the summary here. And if you click on view details, I thought this was helpful just for everybody to kind of see different syndicators and what access and information they have for you as an investor. So high level investment details here on what that was. We have an investment summary. This is kind of what was on the executive summary from the start. All of your files are on here too. K1s, quarterly summaries, updates, distributions, all the stuff that you'd want at a high level detail for the property. And then in here, they also have quarterly updates too. So I thought that was a good perspective for those of you who may not have invested in your first deal yet. One, what does it look like going all the way through? And two, just as a comparison for different syndicators, the access to information that they have, how easy it is to view your investments in their portal, how regularly they might have to update on what kind of updates they have. So I hope this was helpful for you. It was a good first experience for me. And I probably of our group have a real narrow focus because I got in and got comfortable with Western Wealth. I do have a few other investments, but this was a successful first one for me. And I hope those details were helpful for you too. So,
hey Ryan, we do have a question.
Yeah. All right.
From Matt, you want to go ahead?
Thanks. Yeah, I was just curious. Are you going to just real quick for everybody, just to put it out there, right? I am a syndicator and stuff like that, but like 80% of my portfolio are passive investments. So that's why I'm in this group and wanting to join and learn from you guys, because I'm trying to find other good syndicators also to invest with. And I've done, actually, Jim and I met at a Western Wealth thing. I'm just curious, will you be reporting on, have you calculated IRR? Because I like looking at IRR along with the other metrics, because it'll show the return sort of over the length of, taking into account the time value of money. Is that something that will be done on some of these deals as we're analyzing them?
Yeah, and that's a great question. Steve and I, when we were putting our two comparisons together, he had IRR on there and I hadn't calculated IRR. So absolutely, that's something that I think is important. I just hadn't pulled it into the metrics on this one. Steve may have left it on his too, but I agree with you. That's an important metric to have, and the one that I'll include going forward. I just didn't pull it into this presentation. So great point.
Cool. Thanks.
Yeah. All right, Steve. I think I've stopped sharing. If you have access now.
All right. Can everybody hear me? Okay. All right. So I will show my deal, and I'm a little nervous because I feel like the student who caught on the tail end of a professor's research project, and the professor's in the crowd, Professor Matt Paceni here. So I'll try to do it justice, Matt. Okay.
Thanks.
So anyways, yeah, so I did this deal. I invested in this deal with Matt. It's called Sunrise Properties. It's in Lawrence, Kansas, kind of a tier 3 market. He and Justin Martinez were the sponsors of this. It's 132 unit, split up into 2 different apartment groups. It's a definitely value add property. Rents were below market by about $75 in one of the assets and $200 to $225 in the other asset. And Matt was trying to do about $4,000 per unit of interior renovations over the next couple of years. So we bought this. He bought this property in August of 2018. The purchase price was 9.9 million, and all in about 10.5 mil. The loan to cost was 78%, and the first 3 years were interest only. The projected hold time was about 5 years, and the purchase cap rate was 5.9%, and they were basing all the financials on a reversion cap rate of 7.5%. It was a generous LP GP split. Thank you, Matt. 83% to the LPs and 17% to the GPs, with they're estimating an ROI of about 83%. So I want to go through why I feel this was a conservative deal in terms of underwriting. The debt to service coverage ratio was about 1.83. Normally, banks like to see at least 1.25. The economic vacancy, just like in Ryan's deal, was conservative as well, noting about 16% economic vacancy in the first year and going down to about 10% in the last 3 years. And the rent increases were, I think, kind of modest, 2% and then 1.5% for the rest of the years. And if you look at the difference between the exit cap and the purchase cap rate, normally you want to see at least a 0.5% difference, with the exit cap being just a little bit higher, just to look at it from a conservative standpoint. And this had a difference of 1.6%. Now, back then in 2018, I was not up on IR partitioning, but you guys can go back to the videos on my explanation of what this is. But essentially, this kind of gives you the risk profile from a cash flow standpoint. So the first number, the 38, which would say that that's a 38% is coming from the cash flow from the operations. And then 62% it comes at the sale. So when they sell it, and that actually at the sale, that actually includes the return of capital. So after having looked at maybe 30 some deals with this IR partitioning spreadsheet, I think it should be you should have at least 25% or more on the cash flow from operations and rent income, and then 75% or less from the sale and from the return of capital. So this is a deal that had no refi planned, and it was a 38 to 62 split, which in my opinion is excellent. So the asset was sold in November of last year. It was held for 27 months. Matt and his group renovated about 70% of the units. And then he back in July, he was, I think, thinking about putting this on the market. So he actually sent a survey to the investors, which I thought was nice. And he asked a few questions, and I don't remember exactly what the questions were, but it was essentially, if you get this kind of return, would you be happy with just selling the property this year? So we all responded, and I think they took our answers into consideration. So if we had held, and correct me if I'm wrong, Matt, but if we held this asset for the full 5 years, the ROI would be 83%, which is what he had estimated. But the IR would be a little bit less than what it would have been, 12% versus the actual, which you can see here, which is 15.3%. So the actual IRR after these 27 months was 20.19%. And I have an asterisk here because maybe Matt can explain this better. We haven't gotten all our money back, so it should be a little bit higher than this in terms of the IRR. But if you look at the pure average annual return, the target was about 16.6%. And we ended up with over 25% return for a total of 57.5% return on our investment in 27 months. So you can see the splits here. But yeah, so I was very happy with this 25% per year return on this asset. Matt, do you have any comments, or did I say anything
The
wrong?
only thing I would the only thing I would explain in just a little more detail for everyone is just the fact that the IRR you mentioned was 12, was going to be 12 to 13 versus 15. That's why we decided to exit early because of COVID and what was happening with COVID. We found that we reforecasted out where we thought things were going to go, and we didn't think they were going to go exactly as planned. And we had a number of people that were interested in purchasing the property. So we sent out that survey to everybody to kind of explain that there was unanimous consent that if we hit a certain threshold, there was many thresholds mentioned to go ahead and sell. So we did. We sold. I mean, we could have held it longer, but we just felt that there was additional risk out there. We wanted investors to get their money back and be able to invest in deals that had been underwritten with COVID in mind.
Thank you. All right, so I'm going to turn it over to Chad, who's going to go over the website, the new and improved website, and the infield site as well, and some of the tools we have.
Great. Thanks, Steve. You guys hear me okay? Check on that first too. Good. Let me share my screen with everybody. So yeah, I'm not going to go through in a ton of detail. You guys can go out and cruise through our website whenever you want, but I was going to hit on some highlights. I will give props to our fearless leader, Jim, that's done a lot of the legwork to get this up and running. But I will note that he's the only one of us that doesn't have a day job too. So we leave that on him quite a bit, but he's done a fantastic job, I think. So some of the things we did want to call out, I'm going to skip over the first couple sections, but I wanted to note our blog post. So any of you, I assume everybody is signed up on our list. We are posting our blogs that we've had out that have published already. We are anticipating doing a blog a week, and those will be coming out in your email. You'll get notified usually every Tuesday morning is what we're shooting for. So you can go out and find ones that we've already posted. Thank you to those of you that have helped write some of these and continue to help write some of these. We're always looking for authors to help fill that content, but anticipating doing one a week for those. Under our library section, we have a books and ebooks page that we've put together that we actually have a really nice blog written by Steve about good investment or passive investing books that correlates to what we've posted out here. We have also linked our the site here to Amazon. So if you have an inkling to buy any of these books out here, we do ask, it'd be great if you could go through our site, because we will receive a little kickback from Amazon for anything that you do. So if you want to help support our cause, we'd really appreciate it. We do treat all of this as a living document, so we'll continue to update these and make fixes, changes, and so forth as we see fit. If you have any feedback on any of it, please let us know. We're always looking for feedback too. And then under our library, we also have the podcast that we've been involved with. So in here, you'll see Jim's greatest hits that he's got out there so far, which he's been in several of them, as Stephen mentioned already, or as Sean had mentioned. There are 2 or 3 more that he's got recorded that'll be coming out shortly as well. So you can find those, as well as other podcasts that we've highlighted that we all kind of shown interest in, participate or listen into. Just to give you a variety, again, to expand the education, being able to find other areas to listen into this passive world. We've tried to drop a lot of that information out there that we've enjoyed as well. And then from the library, the next thing over is our resources. So we've put together a syndicator list, and I'll throw the disclaimer out right out of the gate. We aren't necessarily promoting any syndicators. We aren't rating them. We know one of the things that's difficult to come up with is where to find syndicators that we know, like, and trust. These are a list of syndicators that we've at least have conversation with. We may or may not have invested with all of them, but at least give you a jumping start on a list of people to reach out to and vet for yourself and see whether they're worthwhile to get involved with. We've kind of tried to categorize them. So depending on your interest, if you want to focus on the multifamily, which a lot of us seem to be investing in, we have several of those listed. But if you want to diversify into other asset classes, we've tried to list that out as well, just to give you a starting point. And then from here, also under resources, we've also started listing out events that we were aware of. And this is ever changing, ever building. Again, we aren't trying to convince you to go to any in-person events if you're not ready to in the COVID world that we're living in. But we did want to start sharing things that we knew were occurring, just in case you have some interest and maybe they're in a local town for you or whatever the case may be. Some of them are virtual as well that you could get involved with just to expand your knowledge and also do some more networking. So we're going to continue to populate this as we learn more. And hopefully when the world opens back up, we'll get a longer list and hopefully we can all go attend some of these together as well. Next thing that we have is a list of meetings that we've participated in so that you can go back if you weren't able to join us, or if you found a meeting that was particularly interesting and you want to go back and listen to it again. We do post all of our meetings out here that we've had with some detail about who was on for that one. Here's one that Matt attended that we have recorded as well. You just keep popping up. But they'll be out here available for you. We usually try to post these the day after we have them. So in case you miss one, you should be able to catch up to it the next day. And then additionally, as Sean talked about before, and he'll expand on it a little bit, we are trying to list our calendar of events for you to give you an idea of speakers that we've lined up for future meetings. You can see the dates that we're planning for our meetings to attend. But Sean will let you expand on this a little bit more too.
Yeah, the only thing I wanted to point out here is obviously not only the fact that we've got a great lineup coming. You know, as you can see out those next several months, there is some spectacular guests that are going to join us, but there's also several months there where we haven't figured out exactly what direction we're going to go in. And that's really where we want to lean on you guys as our community. If you've got recommendations of professionals out there in the passive investing world, it'd be great for you guys to lend a hand in helping us line those folks up, whether it's an introduction or if you want to take it upon yourself to get them lined up on your own and work with us to get that done, that'd be great. But some of the talent, some of the expertise that we're looking to bring into this community for these meetings, it ranges from tax advice to accounting advice to contracts and lawyers, an economist, anything that is really going to just hit our mission, which is to educate you guys and ourselves. So really looking for some help here when it comes to speaker topics for future meetings. So, get with any one of us, send us a note, send Jim a note, whatever it may be. If you've got an idea of somebody that might make some sense, we're all ears. Really nothing is off the table when it comes to passive investing topics for our meetings. So just hit us up with some information. We'd be happy to take it from there.
Great, thanks, Sean. After that, then we're into our infielders section. And actually, Sean, I'll punt this maybe to you from the get-go. You can talk about it, and then I can jump through some of this stuff that's in here as well.
Sure. This is really, and Jim alluded to it in his opening remarks, this is really taking its own shape. And I'm very excited to see where this is going to go. We've already got some tools that are going to be housed in here between the sponsor questionnaire and the deal analyzer, and then we've got some other tools that are in the works as well. But this infielder community is digging deeper within the left field investors community that we've already developed here, and this is going to be our special invite only area where we're going to house some stuff that's going to be for the infielder community only. Not only the tools, but there's going to be a forum here where we're going to talk about deals specifically, might talk about some sponsors, some pros, cons, some advantages, disadvantages, but we're really going to get into the weeds of what each of us is doing, not just the 5 of us that have founded Left Field Investors, but all of you as well. It's going to be an area to create action and talk about what's going on out there to help us, not only to learn, but to help us be on the same page and to help become smarter in what we're doing as far as analyzing deals and talking to sponsors. And it's kind of a checks and balances system for all of us in the community. And so with that, as you can imagine, between all of the work and time and effort that are going into these tools, and Chad is really the man behind the scenes in all this, and he's going to go through and show us some screenshots, I believe, of where we're at with these tools. And again, there's been version upon version upon version, and we're going to continue to do that. They're going to be living documents. And this stuff is not going to be free. This is the stuff that we really feel like is going to elevate those within our community that are serious about what we're doing, not only the education piece, but then the action piece, to actually go out there and put some money in some of these deals and really, take your goals to the next level. And we want to be a part of that. And so this is the part where, it becomes a little bit difficult for us, because we're not, our first and foremost priority is to educate ourselves and educate all of you and those that come. But there is a need here to have this infielder community on board. And so the access to this infielder community is going to start off at $99 annually. And again, you're going to get access to the forum and the communication that comes with that around sponsors and deals, and just the passive investing world itself, as well as the tools that we have developed and will continue to develop. And what we're going to do with that is because we're going to continue to put content in there, and we're going to continue to revise what we have. We're going to start off that $99 at the first 50 people. And then, depending on where things shape up for us in that infielder tools and forum realm, we're going to go up from there. So again, everything else outside this infielder community is going to be free, is going to continue to be free. It's free now. And we're not going to stop putting content in that portion of our website, but we really feel like this is an important piece to what we're doing to help, again, take people to the next level in their goals. And that part, we are going to be charging a nominal fee for that. So we hope that, people will find the value in that. And again, we're looking for feedback there as well. So certainly not.
So that's $99. So that's under $10 a month.
Correct.
That's very, very reasonable. Yeah.
Correct.
I'm sure you guys got costs with the hosting of it, the servers and all that kind of stuff.
Yeah, and we'll get into that. That's separate right now, Matt. What we're trying to do with that is because we've already laid out some costs, quite a bit of costs. We've got Patreon. We're using Patreon for contributions, and thankfully we've got some members that are coming in that way. But we're going to keep the two for the time being. We're going to keep them separate. So the infield community is really going to be that $99 until we hit that first 50, and then we'll reevaluate to see if we need to take that membership fee up. But it's going to be just for access to the forums and the tools and stuff like that. And then the other contributions are going to be towards the ongoing expenses of what we're doing and what has already been outlaid for the time being anyway. But good question. Yeah. Good point.
So what do you get for your $99? Let's hop through some of the stuff, and we can field more questions later as well. We did move the forum inside of the infielders section because we do want this to get into some really good dialogue. We've thrown out a few things here, but we anticipate this will bleed into talking about deals, talking about, know, liking, and trusting sponsors. Where would we, be interested in going? We anticipate all that will grow inside the forum, that we felt like it fit inside the infielder section for us a lot better. We originally had a forum outside of the infielder section too. We thought that's probably too much. So we adjusted that and moved it inside so we could get into good dialogue with everybody that wants to join into the group on whatever we want to cover, if you will. And then inside of here, we also have sponsor overviews, syndication sponsor overviews. We anticipate this is going to come out in a version here before too long, that we'll be able to list out sponsors and just general feedback. Again, not trying to rate necessarily, but at least give better feedback than what we have on the list that's out there for the freebie site, as well as then we would have some sponsor review section as well. That is still coming soon also. So we're developing those things. But then in the tools section, what we do have, we've kind of envision this as a journey to go through the different tools that you might need as a new investor and even a repeat investor. The syndicator list is kind of the first thing, knowing who's out there, going out, interviewing them, getting a network built, getting to know them, see if you feel like they're worthwhile going. Then once you get on that list with them and they're sending you offers, the next thing you're going to want to do, once you know who they are, you're going to want to go through the screener. We've built this sponsor screener list, basically a list of questions that you can go through, and you'd be able to download this just to prompt you on questions you should ask for them, what primary questions exist, what they do as general partners, if they have references, questions you might ask to references. I won't go through it all. You'll have access to this. You'll be able to download it and get a feel for what we're talking about. But we've tried to put together a good list of questions to be able to go through to screen a sponsor to get into a relationship with them to figure out if you want to invest with them or not. So that would be your step after identifying who's out there. Then the next piece that you would go through is once you're in a network with them and they're sending you offerings, we have a deal analyzer that we've been working on. And again, all these things are going to keep evolving. But what we did with the deal analyzer, and I'll jump over to Excel. Hopefully you guys can see this. Do you still see my screen? Okay, good. What we've been working on with this is trying to come up with all the different metrics that we might find in a PPM or in the marketing materials that are provided by a sponsor, or financials if you ask for those, and then how those might relate to whether you would rate the deal to be appropriate to invest in or not. So we have a lot of different metrics that are in here. We try to give you some field definitions, and we're going to build out examples on where to find this information to help you sift through, because there is a lot that is in here. And then we break it up by different metrics. And Matt, as you had brought up, IRR fits in our primary metrics section, as well as average annualized return, cash on cash, and equity multipliers. But we have a lot of different things that populate in here that you can go through. Financial information. Once you get through those pieces and get into these metrics, we actually start giving you a target range that we suggest that a deal ought to be in the range to be appropriate to invest in. Not that you shouldn't invest in it if they're outside of the range, but it's more, it will give you things to go ask the sponsor questions about if it does fit outside of the range. And that could be high or low in many cases. You'll see we give a range of our targets. And, you know, if the cap rate maybe isn't the greatest one, but if we get into preferred returns, if a sponsor has 12% preferred returns, that sounds fantastic, but that's pretty aggressive. Maybe we should ask questions about it. And we tried to build some visuals into this to help kind of note as you key in information. So we've plugged in some highlights to just call out whether the deal is within range or if it's out, so that you can skim this really easily as you go through and identify ones that you know, are working okay, ones that aren't. We've added drop-down boxes in here, so they'll automatically populate for you, so that we can't do anything, hopefully, that we don't want you to do in here. So it all aligns pretty well. But we also know not every deal you're going to be able to find all this information in. But at the very least, it's going to give you a good understanding of the deal. And based on metrics that we've picked up from different materials, whether we feel it's a good or a bad deal, or at least whether you should talk more to the sponsor about pieces.
And just Chad, just to add, there is going to be a video that we're going to post that Chad and I are working on that will show you how to go through this tool. And because there are some formulas in there, you might need to, you know, some things need to be adjusted here and there. I would also say that if you really want to understand all the components, Brian Burke's book, Hands Off Investor, is fantastic and covers all of these in detail. And I'm sure that there's a book coming out this summer that will also help us out from Matt, right, Matt? Free plug.
Yeah. If I can have a free plug, there's an email going out on Thursday to everyone on my thing if you want an advanced copy. So yeah.
There you go. There you go. But I'll scroll through some more of this. So we did drop, you know, every marketing material seems to have some kind of investment sample. We do plug that or give you room to plug this in. So if you had, information from the sponsor on what a deal was going to look like and how it was going to progress, and then what it might sell for. We're giving you that, 2 million would be nice. We're giving you that ability to plug this in, and that information then feeds to a second sheet that we have in here that will go through the IRR partitioning study for us. And this is what Steve had alluded to earlier to show you basically the time value of the money that you're getting back and what you've invested to help you understand whether this is, a positive investment for you or not. And we do pull those metrics into the analyzer as well automatically through a formula and give a range on what we recommend they ought to be as well. So you can funnel through that. But I won't go through them all, but you can see we have a lot of different metrics in here with a lot of suggested target ranges for this. And these will be things we'll continue to monitor and update with newer versions. If the industry changes, if Matt's expertise tells us that no, some of our ranges are off and we should suggest something else, we'll take all that into consideration and make updates to this as we go through. And then this one is mostly multifamily focused. We do want to make one for self-storage and mobile home parks. And we'll see if there's other asset classes that we have a lot of interest in that will have a lot of similar questions, but there'll be other pieces, other metrics that'll make more sense for them in ranges that suggest where they ought to go and those kind of things. So more to come on that, but this is what we've got. This will be out in that site with our latest version as soon as we get the site up and running with everything. I'll pause there. Any other thoughts, questions from anybody? Okay, let me jump back over to the website. And then the last thing that I'll point out, which is still, this one we're actually still developing, is a deal tracker. So for those of you that have been investing, you're probably like myself and most of us that were the dugout group, if you will. We're keeping track of everything in an Excel spreadsheet or 2 or 3 of those, and it gets very convoluted. So we're actually in the works with some web developers to come up with a web-based tool to do the tracking for us, that we've kind of just brainstormed all of our Excel spreadsheets and tried to come up with what we'd like to see in a tool that would do all that tracking for us. Version 1 is just going to be to get something on a web-based tool out there for us to do the tracking. It'll be a lot of manual entry. Once you get a deal in, then you can track your distributions as well. But ideally, we want to try to automate some of that through the deal analysis that you've done, or even as Ryan had showed, the sponsor portals. Someday, golden dream here, maybe we can link to some of that portal information to help populate, is kind of what we're hoping to be able to do. But that's down the road by all means. But that's really going to fill out what we've got and track for the infielder section right now. I will bounce back out one other tab to show, as Sean had alluded to. We do have a contribute tab out here. So again, there's a lot of expense to get things up and running that we've done so far. So, if maybe infielder isn't the way you want to go today, or know somebody that has some interest, but they don't want to invest the $99 or whatever it goes to, we do have a page to be able to go to and contribute if you want to help us out with some of the costs, which would be fantastic. And thank you to those of you that have done it already as well. So, but I'll pause there. Any other questions or anything about the website?
Hey, Chad, I'll throw in there too, that one more thing that's coming for the website that's not there yet. And Jim, maybe you lean a little bit closer and show everybody your new toy there. We have our very own podcast that's coming out. Jim has conducted one, I believe, with some more. And so just like the blogs and some of the other content that we're really relying on our community for, we're going to rely on you folks for to be interviewees for Jim and his podcast. So that's coming, and that'll be on the website as well, and the free portion of the website, if you will, once we get those up and going. So be on the ready for Jim to just randomly start choosing people to have on his podcast to interview. because it is all about you guys and getting your stories. And so we look forward to that. So thanks in advance for your time when he taps you.
Yeah, and I will. And just a little bit more about the podcast. It is we're going to be sponsored by TribeVest, who is I know many of you have heard of TribeVest. If you haven't, you'll hear about them. They're just a great partner for us. It's a lot of synergies between our group and what they're doing. TribeVest basically allows some people who maybe don't have the funds right now to do a $25,000 or $50,000 or $75,000 minimum to just invest together. So it's a really neat platform, and they've agreed to help pay for some of the stuff to get us off the ground for the podcast part of it. And they will, then they'll have a little sponsorship spot in there as well. So that is coming hopefully soon, as Sean said. So that is the basics for our meeting tonight. I just want to pause for a quick second. We're going to get to breakout rooms and introduction segment, but I want to pause and ask if there's anyone that has any questions about anything that we've covered tonight. You can ask them now in the big group, or you can ask them in the breakout rooms. But are there any questions or comments? Nope. Okay, perfect. So we usually do a couple of member intros, and I didn't really prep ahead of time, but I'm going to ask Nate Roderick, who just joined today, to just, for a minute or two, just kind of tell us a little bit about what you do in real estate, why you're here, and kind of where you'd like to go. And then maybe after that, I think Tom Gessels, you haven't talked before, have you? Nope. Okay. Would you mind? All right. So Nate, why don't you go first? Give us 2 minutes. And again, before Nate starts speaking, the reason why I'm kind of starting to talk fast is my blood pressure rises when we get to 8 o'clock, because I try to keep these meetings to 1 hour, excluding the networking time. But we did start at 7:04. So if Nate goes 2 minutes and Tom goes 2 minutes, I will reach my goal, kind of. So Nate, you're up.
All right. I think I can do this in 90 seconds. Can you guys hear me? All right, awesome. Well, first of all, thanks, Jim, for inviting me this evening. I've been aware of this group, kind of keeping an eye on Facebook, and was really interested in it, and actually thought it was maybe just for accredited investors or something. And I was speaking with Jim earlier today, and he said, no, it's open to everyone, so come check it out. So I'm happy to be here. I'm on the very active side of my investment career. My wife and I have a small investment portfolio, 12 units, duplexes and a fourplex here in Columbus. And we're looking to aggressively grow, but my goal is to really end up on the other side of this equation where you guys are, and become less and less active as we become more successful in those investments. So I recognize some faces on here from the COIN group, the Central Ohio Investor Network, which was where I first met with Jim. And happy to kind of follow on some coattails here and continue to learn. I'm really here to learn, hope to get involved in some larger multifamily projects in the next few years, potentially on the GP side at this stage in my career, but really just here to learn, meet people, and that's about it. And I'm appreciative of the invitation, so thank you.
Awesome. Thanks, Nate. Tom, you're up.
All right, very good. Jim, thanks for continuing to put this together, not just Jim, but the rest of you guys on the leadership team. Tom Gessels, I, since 2013, have been involved primarily in single family rentals, kind of a buy and hold guy. I had a couple of duplexes, but have since sold those. My preference is really just single family, and then also transitioning over to really what we're talking about. And that's all about getting into syndications. And Jim, since you and I had coffee, it probably was about a year or so ago. That's really when I started to really ramp things up and do a lot more research in some of the syndicators. And since then, I've invested in 3 different deals, 2 of which, actually it was mentioned just a few minutes ago, sorry. Jim, you'd mentioned the TribeVest. So I'm in one of the tribes, first time I'd done it. And the tribe that we're in invested in 2 syndications here in the last couple of months. So that was a nice way to kind of dip my toe into things. And then since then, I've also gone on my own and done another investment in a syndicator as well. So just starting to get into this, but still interested in growing the single family portfolio as well. So trying to diversify just a bit, but That's me in like 90 seconds.
Awesome. Thank you, Tom.
You
So
bet.
before we go into the breakout rooms, I just want to mention next month's meeting is February 22nd, and Jeremy Roll will be our guest. For those of you who haven't heard of Jeremy Roll, you're not listening to enough podcasts. He's fairly well known as a passive investor. I don't know if I'll say this in front of him, but he is kind of the Warren Buffett of passive investing. He's been doing it for years and years, and he's really good at it. And, really privileged to have him. So that'll be February 22nd. Another notice, if you've added these meetings to your calendars or you've gotten invites, I'm going to delete all of that because I just need to restart on the Zooms and the calendar stuff. So if you get some deleted stuff, that doesn't mean we booted you out. You're still in. Also, be on the lookout over the next couple of weeks for an invite to the infielders. You all, it is invitation only, but here's your invitation. You are all invited. So just be on the lookout for that. And as always, please provide feedback. We really appreciate you guys showing up to this meeting. I was thrilled to have 30 some people here out of the 80 some members we have. I think that's fantastic. That just is a testament to the community we are building. And, our goal is to keep building that community. And as part of that, learning and networking, right? Education and networking. So we're going to network right now. I'm going to send you all the breakout rooms, but part of the education is that I hope I don't mess it up this time. If you're in a room with Ryan, he has to leave, but he's going to set up the room, and he's been kind enough to kind of get it started, and then he's going to bolt. So I'm going to open the rooms now. There is no need to come back when we're done. When you're done, you're done, but I will not shut down the meeting until everyone is done this time. So thank you all for coming. Give me just 1 second to set up the rooms. And if I don't speak with you until then, we'll see you February 22nd with Jeremy Roll. Thank you.